Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business, and today we're diving deep into Waystar Holding Corp's latest financial report. Let's just say they've been busy. Waystar is a big player in healthcare payments. And this report for the year ending December 2025 gives us a real look under the hood at how they are doing, from their massive revenue growth to the risks they are managing. Stick around as we break down the numbers and tell you what they actually mean. So let's get right into it. Waystar reported a total revenue of $1,099.3 million for the year ending December 2025. This is a solid jump of 16.5% compared to the previous year, which is great news. Looking at their cash flow, they had a net cash provided by operating activities of $310 million for 2025. This shows that their core business is generating a healthy amount of cash. Now, a huge part of Waystar's strategy is growth through acquisitions. And in October 2025, they acquired Iodine for a whopping $1.26 billion. This deal significantly boosted their goodwill on the balance sheet, which is basically the premium paid over the fair value of net assets. This acquisition is a major factor behind their increased intangible assets, which stand at over $1.3 billion. Financially, things look strong. Their adjusted EBITDA, a measure of profitability that strips out certain costs, came in at $462.1 million for 2025, an increase of over 20% from the prior year. This means their core operations are becoming more profitable, and they are not just growing revenue, they are growing their client base too. The number of clients paying them over $100,000 more than doubled from 1,203 in 2024 to 1,391 in 2025. This shows they are landing bigger clients and retaining them. Waystar also has a significant amount of debt, with $1.4 billion outstanding under their first lien credit facility as of the end of 2025. While they have been actively paying down debt, the sheer amount means they are exposed to interest rate fluctuations. They are using interest rate swaps to manage this risk, which is a common strategy, but it is still something to keep an eye on. In today's world, cybersecurity is paramount, especially in healthcare where sensitive data is involved. Waystar states they have a robust program guided by the NIST cybersecurity framework. They undergo regular audits and maintain certifications like HITRUST and SOR 2, which adds a layer of trust. However, as they readily admit, no system is completely impenetrable. They also have extensive indemnification agreements in place, which is pretty standard for protecting themselves from various claims, especially related to intellectual property. But the tricky part is that the maximum potential future payments under these agreements are just not something they can pinpoint, because they involve claims that might happen down the road. Looking at their executive compensation and governance, they have a clawback policy in place, which is good. It means they can try to recover incentive compensation if it was based on numbers that later turn out to be incorrect due to misconduct. Now let's talk about the stock itself. Waystar went public in June 2024. Since then, its stock price has seen some movement, trading between $20 and $48 through February 2026. This kind of volatility is not uncommon for newer public companies, and a lot of factors can play into it, from market trends to their own company performance. Financially, Waystar has turned a corner. After reporting a net loss of $19.1 million in 2024, they posted a net income of over $112 million in 2025. This is a massive swing and highlights the impact of their revenue growth and debt reduction efforts. So, what is the verdict on Waystar? They are a growth company in a crucial sector, demonstrating impressive revenue increases and a successful acquisition strategy with Iodine. Their shift from a net loss to a significant net income is a major win, and their focus on recurring revenue makes their business model look quite stable. However, the significant debt load remains a point of caution. While they are managing it, any major economic downturn or interest rate hike could put pressure on their finances. Also, the reliance on integrating acquisitions smoothly and the constant need for innovation in a fast-paced tech and healthcare landscape are ongoing challenges. Their cybersecurity measures seem solid, but you can never entirely eliminate the risk of a breach. Overall, Waystar is showing strong operational progress and strategic execution. They are navigating a complex industry with what appears to be a solid plan, but like any growth-focused company, there are definitely risks to watch. What do you think about Waystar's performance and their future prospects after breaking down this filing? Let us know your thoughts in the comments below. If you found this analysis valuable, smashing that like button and subscribing to Corporate Decoder is the best way to support us and ensure you don't miss our future deep dives. And don't forget, we have a fantastic community over on Discord, linked in the description. Thanks for watching, and we'll see you on the next one.